Here's something that's been flying off the charts lately. SoFi. We told you 1 week before the earnings release date to keep an eye on this one. And we hope you did, because the stock just rocketed by a whopping 20% on earnings day and is now up more than 150% since the beginning of the year. This video is all about the absolutely stunning Q2 2023 results that sparked the spectacular ascent. We'll explore the growth story, the robust financials, and the exciting future that's on the horizon for SoFi. So, buckle up folks, we've got a lot to cover, and you won't want to miss a moment of it. Welcome back to Investing Lighthouse, folks. In the finance world, nothing's hotter than SoFi right now. Both revenue and earnings exceeded analysts' consensus estimates, and the company raised its full-year outlook even higher. This online finance company, a favorite among retail investors, just reported a record-breaking surge in new members this quarter, adding an additional 584,000. SoFi now has over 6.2 million members, a 44% increase over a year ago. This clearly signals that SoFi's value proposition is resonating with consumers. The company is expanding at a dizzying pace, with the addition of nearly 847,000 new products during Q2. This brought their total products to over 9.4 million at the end of the quarter, an increase of 43% from the same quarter in the previous year. SoFi's total deposits grew by $2.7 billion in the quarter to $12.7 billion. Remarkably, SoFi has seen its customer deposits increase by 26%, while some regional banks were recently victims of bank runs. How did they achieve this impressive feat? In addition to offering high interest rates to depositors, they made the brilliant decision in March of 2023 to offer up to $2 million of FDIC insurance to their checking and savings members to protect their deposits. This is 8 times the industry standard, as other banks offer protection of only up to $250,000 per account. As for revenues, they jumped 37% year over year, and it was the 9th quarter in a row where they delivered record revenue. Those are the kind of numbers that make investors sit up and take notice, especially since they achieved all of this without relying heavily on the student loan business. And with the student loan moratorium ending, SoFi is well positioned to benefit from further growth acceleration. Anthony Noto, the CEO of SoFi, sat down with Yahoo Finance Live on July 31st to give some insights into what's been driving the company's impressive growth. He described the recent performance as the result of a concerted effort over the past 5.5 years to develop a one-stop shop for financial service needs. And the results are now starting to show. Noto said that for the first time, SoFi's revenue growth was primarily driven not by lending, as had been the case before, but by their technology platform services and financial services business. This is a sign of the success of their strategy to diversify. The robust revenue and earnings growth are at the core of SoFi's stellar performance this quarter. The total GAAP net revenue for the second quarter rocketed to $498 million. Marking an increase of 37% from the same period last year. But that's not all. Their record-adjusted EBITDA of $76.8 million this quarter is a massive 278% leap from last year's $20.3 million. Additionally, SoFi recorded a net GAAP loss of $47.5 million, showing a significant improvement from the net loss of $95.8 million from the previous year's quarter. Let's now quickly drill into SoFi's segment results. In Q2 2023, SoFi's lending segment generated a GAAP net revenue of $331.4 million, up 29% relative to the same period in the previous year. This significant increase was primarily driven by 2 factors: an uptick in loan balances and an expansion in net interest margin. But it doesn't stop there. The lending segment's contribution profit also experienced a sharp rise, reaching $183.3 million in the second quarter of 2023. This is a 29% hike from the $142 million recorded during the same time frame last year, and clearly demonstrates SoFi's adeptness at leveraging the ongoing demand surge for its lending solutions. Their technology platform segment posted record net revenue of $87.6 million during the second quarter, marking a year-over-year increase of 4% and a sequential uptick of 13%. This growth was largely fueled by the contributions from Galileo and Technisys, which exhibited 9% and 21% sequential revenue growth respectively. Nonetheless, the segment's contribution profit depicted a different trajectory, experiencing a 21% year-over-year decrease to $17.2 million. Even with this drop, the contribution margin displayed modest improvement from the previous quarter, solidifying at 20%. A few standout new products in this segment that are worth mentioning include Connecta, an AI natural language customer service bot, and the Payments Risk Platform, a platform leveraging transactional data to reduce transaction fraud. Turning our attention to SoFi's financial services segment, the second quarter of 2023 was a period of extraordinary growth. The segment's net revenue soared to a record-breaking $98.1 million, a monumental 223% leap from the same quarter in the previous year's $30.4 million. This remarkable growth was fueled by several of SoFi's products and services, including SoFi Money, SoFi Invest, SoFi Protect, SoFi Credit Card, and its Lending-as-a-Service offering. These services together helped to propel the financial strength of this segment. In terms of contribution loss, the financial services segment showed significant improvement. The loss was curtailed to $4.3 million, marking a substantial $49.4 million improvement from the $53.7 million loss recorded in the same quarter last year. This improvement marks the second quarter in a row of positive variable profit in the segment, indicating increased operational efficiency and successful monetization efforts. And with a robust balance sheet and a strong cash position of $3 billion, SoFi is well-positioned to capitalize on future growth prospects and continue its remarkable expansion and innovation. As we gaze into SoFi's future, the management team has also given a bullish outlook and good reasons to be optimistic. For the full year 2023, management raised its expectations for adjusted net revenue from $1.955 to $2.02 billion to a higher range of $1.974 to $2.034 billion. Similarly, the expected full-year adjusted EBITDA has risen from a former $268 to $288 million to an impressive $333 to $343 million, indicating a robust 40 to 44% incremental EBITDA margin. The company predicts the lion's share of the adjusted net revenue and EBITDA for the second half of 2023 will be realized in the fourth quarter. At this point, SoFi also expects to achieve its GAAP net income profitability goal. If SoFi becomes profitable during Q4 of this year, it would be a significant milestone and a testament to its capability to produce results. Some analysts on Wall Street are bullish too. Jefferies analysts, led by John Hecht, were highly positive about SoFi's results and continued rapid member and deposit growth. They assigned a buy rating with a target price of $11.50, well above the median target of $8 from the other Wall Street analysts. Mihir Bhatia, an analyst at Bank of America Securities, also increased its price target to $11.50, but issued a neutral rating on the stock. On the other hand of the spectrum, Michael Peredo, an analyst at KWB, has sounded a warning bell on the fintech's valuation, voicing concerns that it might be overextended and hard to maintain in the long run. This apprehension has prompted him to alter his rating of SoFi stock, shifting it from a neutral market perform status to a less encouraging underperform. Alongside this downgrade, Pareto holds a bearish price target of $7.50. In conclusion, the Q2 results from SoFi paint an impressive picture. With robust revenue growth and GAAP profitability around the corner, SoFi is showing all the signs of a company poised for a bright future. The upward revision of the revenue and EBITDA guidance further underlines their confidence in their strategic direction and execution. So, what are your thoughts on SoFi's spectacular Q2 results? Is this a stock you'll add to your watch list, and on which you'll conduct thorough due diligence? Remember, this channel is all about sharing information and sparking discussions, so leave your comments down below. As always, make sure to hit that like button and share this video with your fellow investors. And go ahead and subscribe to our channel for more insightful financial analysis. Until next time, stay savvy investors,